Meanwhile, the S&P and Nasdaq hitting new highs yet again, helped today by those strong earnings from Microsoft and Meta. My next guest expects tech to remain a powerhouse. Joining me now is Nadia Lovell. She is senior U.S. equity strategist at UBS. Nadia, we are getting closer to your upside scenario of 6,700 on the S&P. What would convince you that these levels have staying power?
I think it has to be the continued pickup in tech, and we have conviction in that. We are more looking at things at a very selective level. We're not necessarily overly focused on the broad markets because, as you noted in your opening, we think that tech and those secular growth stories are really the powerhouse here. And so at these levels, we would continue to be selective and add into those secular growth trends. I mean, when you think about it, like tech is where the growth momentum is and continues to be. CapEx spending continues to go up. And so along with the AI story in tech, as well as the electrification stories in some of the areas like utilities and industrials, these are the areas of the markets that we think that investors should focus on, along with financials. As you noted, the IPO market is also opening up.
You look at crypto, what Bitcoin's been doing over the last few months, look at the reemergence of meme stocks, but then also look at what Microsoft and Meta did last night. How do you figure out whether this is overheating in the market or just healthy, warranted excitement?
Look, what is an indication is that investors' risk appetite has increased. I mean, yes, you're seeing some pickup in sort of the meme trade, but it's no way back to the levels it was a few years ago. And so that could present some upside to the markets, but it also does present some downside risk. But we think that investors need to continue to focus on where the core growth is. And when you think about what Microsoft said overnight and also what Meta, the fact is these companies are delivering on earnings growth. The CapEx numbers are moving up. We, in fact, I think you said earlier, had to move up our CapEx numbers for AI to $500 billion for next year. I mean, that's suggesting a 33% year-over-year growth on top of the 67% that we've seen this year. So we continue to encourage investors in our own portfolio to stay up in quality on those secular growth stories.